What's up, millennials? I took 9% off of my STEM position to take some profits because of technical analysis, evaluation, and portfolio allocation. So those are the things we are going to talk about today. So let's do it. Before we're going to talk about the valuation and the technical analysis, I'd like to talk a little bit about my current position of STEM. So as I've said, I took profits on about 9% of my STEM position to add that cash to another position, AgEagle, a drone company I also have right now. And of course, I notified my Discord premium members, which you can also join by going to nesami.com/discord. As of right now, STEM is my second largest position. My target was to have this more or less as the fourth or maybe even fifth largest position. So yeah, so far I'm very happy with how the position has grown over the last couple of weeks, over the last couple of months. Now, so far I'm happy with the position I have, but if it does go up a little bit more to maybe like $40 per share, I might take some more profits to add that cash to other positions instead. These are my buys and sells for now. So as we can see, on the 7th of May, I started my position and I bought a position at $21.44. And then on the major dip on 13th of May, I added more to my position, first at $18.64 and then at $17.60. So right now, the average buying price has been around $20 exactly. And right now I took some profits at $32.77. Before we're going to look at the technical analysis for the STEM chart right now, we're going to talk a little bit about the valuation. And first of all, we're going to start off by the price to sales ratio of STEM right now. So as we can see, I've got this document of basically all my long-term holds, and STEM right now has a amount of market cap of a little bit more than $4 billion, which is based on the amount of shares that was present in the Q1 filing, a little bit more than 125 million shares, and that multiplied by the current price per share gives you a market cap of a little bit more than $4 billion. As you might know from my previous videos about STEM, STEM is going to have a revenue more or less of 147 million according to STEM, the company itself. And that is going to give you, if you take that market cap divided by the annual revenue of 2021, a price to sales ratio of a little bit more than 27 right now. And of course, 27 in general is not very cheap, but well, if you take into account that STEM is definitely a growth company, it definitely makes sense for STEM to have a relatively high price to sales ratio because they are going to grow more in the future. So they're basically going to grow into their price to sales ratio. However, at the same time, we do see that there are some other companies in this list that have a lower price to sales ratio. So it could make sense to put some cash from STEM into a different stock, for example, Upwork. A while ago, back in January, at the beginning of this year, January 24th, I released a video about the valuation of STEM. If you want to check it out, I'm going to put the link in the description below this video. But I basically said that there was a range of valuations on the low end, $22.55, midpoint valuation of $28.77, and a high valuation around $35. And right now we have been very close to that level of $35. Then if we go back to the valuation benchmarking page of the investor presentation as of December 2020, we can see the EV to sales ratio of all these similar companies that are looking very similar to STEM. Companies like Array Technologies, Enphase, SolarEdge, Sonova, SunPower, Sunrun, Bloom Energy, ChargePoint, and Tesla. And for all of these companies, we can see the EV to sales ratios on this page over here. So we can see that on average, the median EV to sales ratio is around 12x. We can see that based on the price per share of $10 per share, STEM was just trading at 5.6x, an EV to sales ratio of 5.6. But we also saw some other companies like Array being quite low, but on the other hand, Sonova being quite high, and Sunrun being almost exactly in the middle at 11.8. So if we then go back to our table of the price to sales ratios, we can also check out the EV to sales ratio of STEM at this very moment in time. Because the price to sales ratio was 27.3x, but if you take into account the amount of cash they currently have on their balance sheet as of the latest Q1 filing, which is 426 million, then you can also determine the EV to sales ratio, which right now is 24.4x. And if we go back to the investor presentation, we can see that 24.4x is on the high end, especially if you compare to the other companies I've just been mentioning. But you might say, okay, those numbers were as of December 2020, so a lot probably has changed in the last half year or so. And that is definitely true, but as we can see, STEM has definitely outperformed the other companies, and those competitors I've just been talking about mainly have gone either downwards or have gone more or less at the same level, or are still trading more or less at the same same level, apart from a few companies like Enphase, SunPower, and ChargePoint. So because these charts have gone down or have stayed at more or less the same level, the EV to sales ratios for these companies have also been the same or are right now lower. Now, I haven't looked at all the EV to sales ratios for all of these companies, but I believe that STEM right now has the highest EV to sales ratio apart from ChargePoint. So in conclusion, based on the price to sales ratio and the EV to sales ratio, it looks like STEM might be currently fairly valued or slightly overvalued. And also, if we take a look at the analyst rating from Goldman Sachs, we can see that they had a price target of $30 per share. Right now, of course, we are slightly above that. In my last video about the technical analysis for the STEM stock, I said that there was a 70% likelihood of more upside in the weeks after June 1st, of course, when I released the video. And that was when we were back trading at $25 per share. Right now, back in that video, of course, I had a target of $31 per share, which we right now overshot, and we even went slightly above that. When we go to the most recent price action, we can see that we of course had a very, very strong move on the STEM chart all the way back from the May 14th. We had a very strong move to the upside. We didn't really stop, just apart from this slight region over here for a couple of days. But now the momentum seems to be waning a little bit. It doesn't seem to be as strong anymore. When we look at the support and resistance levels, we can see a few important levels. First of all, the level of about $35.70, which was created by this high over here, this high over here, this high over here, and now it looks like we have created another high over here at the same level, around $35.70. So that has definitely been an important level of resistance. I also think that the level of $31 still is an important level. I already mentioned it in the previous video about technical analysis for the STEM stock. And this level is mainly created by this low over here and this high over here. And now it looks like we created a nice low over here. And let's see if we now are going to hold above that support level in the next coming trading days. If we would move below that level, you could say that the next important level of support is right here around $24.50. But honestly, I don't really think that we are going to go down there because the trend has been very strong. So I think it's unlikely we're going to go all the way back to that blue box. If we turn on the exponential moving averages, the 21 and the 55 EMA, the 21 EMA being the purple line on the screen right now, and the 55 EMA being the white line on the screen. And we can see that the 21 EMA, the 21 exponential moving average, has been used quite frequently as support and as resistance too. If we go back all the way back to December and January, we can see that the 21 EMA was used as support right here at the end of January as well. And when STEM started to downtrend instead, we can see that the 21 was used pretty nicely as resistance instead over here in the middle of March. And also over here at the beginning of April and here at the end of April as well. So right now we are of course back above that 21 EMA. So let's see if the 21 EMA is going to be acting as support right now instead. But if the 21 EMA would not be able to support the movement right now, I think that the 55 EMA could act as a pretty nice level of support instead. And that level is right now hovering around $27.50 more or less. When we look at the RSI, we can see that the RSI for now is still above the exponential moving average on the RSI being this blue line and the EMA on the RSI being this white line over here. So now it seems to be that RSI is still above it, but it could definitely go back down below that EMA in the next couple of trading days. At the same time, we also see that the EMA, the white line over here, is waning a little bit more to the downside potentially. It definitely had a very strong move all the way back from May 17th, more or less. But right now it seems to be that it could top out right here, right now. At the same time, we also have some bearish divergence going on the RSI. Bearish divergence meaning that the price action is making higher highs. So as we can see, we made a high over here and a slightly higher high over here. But if we go back to the RSI, we can see a high over here and a lower high over here. So price action is making higher highs, while the indicator, in this case the RSI, is making lower highs, and that means bearish divergence, which could lead to a correction. And then the MACD, which right now is still above the signal line, but it does look like the MACD is waning a little bit as well. It looks like we might see the MACD coming down a little bit more. Let's see if it's going to hold above the signal line or not. If it's going to cross below that, that might be a little bit more bearish. Now, before I'm going to give you my thoughts on what could happen in the short term, I recently launched a program about technical analysis for absolute beginners. So if you also want to read charts like me, definitely check out nesami.com/TA. So my thoughts, and this of course is not financial advice, but I believe that in the next coming weeks, I would be leaning a little bit more towards a little bit of downside. We might come back down to the 55 EMA, which probably is going to be around $28. In the long term, however, I think that the trend is still strong, so in the next coming months, I would be leaning towards a little bit of more of upside. I could definitely see a move towards more or less $40 in the next couple of months, but the valuation would start to become a little bit high in my personal opinion, so I wouldn't mind seeing the price action consolidate between the level of $30 and $40 more or less. And as always, I'm also very much looking forward to your opinion. Do you believe we're going to have a correction in the short term, or do you believe we're going to go higher first? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!